Hey everybody, how's it going? This is Seth Williams from retipster.com. And today I'm sitting down to talk with DJ McClure. He's the Director of Sales for National Flood Experts. And the reason I wanted to talk to DJ is because I heard a different podcast he was on a little while ago where he was talking about this idea of when a property is in a designated flood zone, it's actually possible to get that removed from a flood zone, which can be a pretty big deal from a cost standpoint with the cost of insurance and the ability to do certain things with that property. And whether you own or are looking at buying a property that currently has a structure on it, or even if it's vacant and maybe someday you're going to build something on it, it's a significant thing if you have the ability to change that situation. So I didn't even know you could do that. So when I heard about that, I was like, man, I got to talk to him and figure out what does that take? How do you go about making this all work? So, DJ, welcome. Is there anything else I should say about you as I'm introducing you?
No, that was a pretty great introduction. I think we're ready to bring you on board, work for us.
Sweet. Anytime. Just let me know. So for those who may have not ever owned property in a flood zone, or maybe they don't understand why this is a problem, what are some of the big disadvantages right off the top of your head of having property that's in any kind of a flood zone?
Sure, that's a great question. So for most property owners, they go into the lending, and what happens is that your bank is obviously running a flood zone determination of that particular property. And when it's flagged as being in a special flood hazard area, part of the closing documents is that flood insurance is a requirement. And then depending on what type of loan that you have, will determine the limits that they require. In some cases, it's full building replacement and business income replacement. So the price can escalate commercially very, very quickly.
Yeah.
And so then when we go in, we do a free audit of the property, do an engineering analysis, and determine that that property, in fact, was included in the flood map and can be changed into a low-risk zone. Those mandates from the lender are then removed, and you're free to insure the property how you'd like.
So basically just greatly reduces the cost potentially of having to pay flood insurance and income replacement insurance. Is that what you said?
Getting the flood zone corrected and getting into an X zone, those surplus requirements are gone, and then your primary insurance is going to be at the lowest price point possible. I often use a car analogy. If you've got a real high-priced sports car versus maybe a Prius, obviously a Prius is going to have a lower risk rating, which is the same thing for a flood zone property. You get it into a lower risk category, and the multiplier is much less.
Now, if a property is just a vacant lot, like nothing's on it, there's not a whole lot going on there, I'm trying to think of how big of a problem this is. I know in my mind, I always just think, well, if I'm flipping a piece of land and the future person that buys it from me, say if they want to build a house on it, that's, if they're doing their homework, that's something they're going to care about because they're going to have to pay extra flood insurance for as long as they own that property. Are there other consequences that, a land investor would have to keep in mind if their land is in a flood zone, like just limiting their uses or just costs of ownership or anything else that matters that I'm missing?
That's a great question. And depending on the location that you're in, there's local permitting laws that designate the elevations at which you have to build the structure. Houston, for example, has a 2-foot floodboarding rule. So the structure entry point has to be 2 feet over the flood zone. Mm-hmm. And so depending what type of area that is and what type of structure you're building, that obviously can add cost to the construction plans. Whereas if we're able to then go in and prove with the engineering data that area can then be carved out of the flood map, those building restrictions are then lifted. Mm-hmm. And so it frees you to develop the property how you would like. So I think it's important to explain kind of how this phenomenon happens. As the flood maps are created community by community, each individual area goes in, they do their research, they put together their modeling. But at a certain point, regardless of what level of detail they have, there's averages that come into the equation. And so obviously there's not funding to survey on a building by building level. So within those averages, that's where we find the variations in the property, especially certain types of property like apartments that tend to be somewhat built up higher than a parking lot, for example. And those are the kind of things that we're going in to determine. For a land project, you can determine what the lot elevation is sitting at currently, and if it's cost effective, potentially fill dirt can be brought in, retention ponds can be built in as well, because you may have the type of permitting laws that require if you bring in so much dirt that you also have to remove so much dirt. So sometimes it's cost effective and sometimes it's not.
Yeah. So I know I use a service called Data Tree, which has a flood map layer you can put over the whole map of the US. There's also like the FEMA website where you can download flood maps and that kind of thing. However, I've found that, like, for example, on the FEMA website, I've downloaded flood maps from there before, but they were dated 1982 is when they were done. And since that time, I know they've actually like changed the layout of the land primarily because of a flood zone to like get rid of it in a certain neighborhood. And I'm just curious, like how accurate are those flood map sources? Like, can you really trust them? Or I don't know. You have any thoughts on that?
Well, the flood maps are only updated generally about every 15 years. The
Mhm.
amount of time it takes to gather that data is quite lengthy. But then we do find areas where the maps, for whatever reason, are still from the 1980s, and
Mhm.
so land development and real estate development moves at a much faster pace, and so it is very difficult to trust the accuracy of maps that are that dated. Just with technological advances in itself, we're going to have a more accurate idea of what flood risk that area really is at currently.
There's different flood zone levels, right? Like some of them are worse than others. Is it like 100-year floodplain, a 500-year floodplain, or how does that work? Like, which ones are you most in trouble if you're in that flood zone?
Yeah, so you have 500-year floodplains, technically are part of the X zone. So those are not generally zones that would be required for anything special by a lender. Once you get inside the 100-year floodplain, this is what falls into the special flood hazard area, whereas a lender will require flood insurance for that property. Within flood zone categories, you have V, like Victor, flood zones, and then you have A flood zone categories. Your V are your coastal flood zones, where you're expecting, water to rush up onto the coast, kind of your coastal Florida areas. That would be the kind of the thing that would come to mind. Your A flood zones vary within certain levels of detail, like an AE flood zone is the most common. That's where you see within some of your local areas where there's a specified elevation associated to it. Say it's an AE 10-foot flood zone.
If I'm looking on one of these, flood maps and I see, oh, looks like my property is just inside the flood zone. What can I think through, or how do I know from that information whether or not I have a case for getting my property reclassified or removed from that flood zone? Like, is there anything I need to like think about, or do I just, no matter what, just pick up the phone and call DJ and see what he can do for me? Like, how do you think through that?
Yeah, from the average property owner, they may not have much idea if there may be a case. And so, yeah, I would say if anyone's ever curious, they're welcome to reach out to us. We do a free review of the property and can give them, regardless of what information they have, if they have a current elevation survey, a certificate of the property, we can obviously come to a determination at that point. But it's good to know, does the property have a history of flooding, even though sometimes that's not always a tell example that it won't still qualify. Harvey was a 2,000-year storm for Houston. So many areas flooded that we've still been able to help since then. And so they're obviously keeping insurance just at a lower price point. Understanding the history of the property is probably the first thing I would say. And then otherwise, if you're curious, reach out to us and see if we can help.
How much does this cost? Like, say somebody contacts you and they're like, yep, let's do it. And you do your audit and you figure out, yes, we can do this. We can make this go away. Like, how do you guys get paid? How much does that cost? At what point does it actually incur an expense to your customer?
Sure. So if we do a flood zone review for a client and determine that we can get property out of the flood zone, our fee is just based on the current flood premium of the structure. Depending on how many structures it may be that qualify, that will then determine the end price. We have a few other solutions that come into play where it may not be the flood zone that we change, but we may find some engineering data that we can leverage in a positive manner. And usually either of these scenarios are going to result in some form of a refund for the client. So our fee is then generally offset by the refund that they're receiving.
So the insurance company will actually give money back?
Yeah, so the NFIP insurance, they have rules in place that are specific to a letter of map amendment.
Hmm.
So, meaning when a map has been designated from an high risk to low risk, they're able to then rewrite the policy or cancel the policy entirely and then be refunded back for the current policy term
Hmm.
for the entire year.
Does it ever happen where you look at a situation and you determine we can change this classification, but you have to change your property in some way? Like you have to build up an earth berm around it or something so that water can't get in. Is that ever the solution, or could that be the solution, or is that not really how you go about doing this?
It's one of the things that we look for. We have like a 5-step process that we go down through the review, and that's usually, a last and final option. So if we've gone through all the data, maybe we've sent one of our own engineers out to the site to gather new data, comb through all the insurance to see if there's any opportunity there for cost savings. And then if there's still nothing that we've arrived at, then we start looking at physical improvements to the building. Sometimes there's washout areas around the buildings. Just over time, the land has kind of lowered itself a few inches, a year perhaps. So there are situations where you can go in and repair that, and then resurvey the property with those new elevations. And then there's more extreme cases where building a berm around the property or some type of permanent barrier could come into play. Again, with real estate, it's always, is it a cost-effective solution built into the performance strategy you have for the length of time you plan to own it?
Makes
Is it
sense.
going to add value to the property is always the final question.
What percentage of these deals do you actually end up like succeeding in making a change and, making an impact on that?
Sure. So we're qualifying cases right now in over 60% of the properties that we're reviewing nationwide. When we determine that a property qualifies, we're at a 99% success rate in getting these approved by FEMA.
Sounds like it's worth looking into then, huh? What kind of impact is there for this kind of flood zone change on insurance? Like, I guess it either reduces the cost of that or it wipes it out completely if you totally get it out of a flood zone. Is that like the desired result?
It depends, depending on where your property is located and the history of that area. Our clients in, the Gulf Coast region, they typically still keep a flood insurance policy, but rather than pay, 2,000-3,000 a building, it could be as low in certain scenarios as say 720 a building.
Hmm.
So there can be quite a delta in the pricing structure, not to mention if they had any surplus requirements on top. Some of the more extreme cases that we've had, we've saved clients, in some cases, $60,000-$70,000 a year.
Wow, that's huge. Man, that's amazing. What does an insurance company need to see in order to adjust that premium? And what does it take to give them what they need? Like, do they just need, here's a stamped paper proving that it's not a problem anymore? Or what does that look like?
Oh, great question. FEMA issues a federal document specific to the legal description of that property and the structures that are included in that letter of map amendment document. There's a federal case number that the banks and the insurance carriers can reference. But in giving that document to the insurance carrier, they're then able to adjust the rating, issue an endorsement back to the clients in the form of a refund, and then adjust that policy's declaration page going forward.
And what states do you work in currently?
We work in all states nationwide.
Do you actually like send somebody out to the property to physically inspect it? Or is this all like just Google Earth map kind of stuff? Or like how involved is this audit process?
In some cases can be very involved. We have engineers in-house, licensed in states all over the country. So we're able to then send our engineers out to those states where we're licensed, and we can actually then certify the data ourselves. This is obviously an advantageous scenario and what we prefer, because then we are able to then analyze the data in real time, get back to the client with what the solutions at hand may be.
Do you ever deal with wetland issues, or is that just a completely different ballgame?
We haven't been brought in at this time for any wetland projects, but I'm sure with land development, it's only a matter of time.
Yeah, because it's kind of similar in that there's like water involved and that kind of thing, but it's pretty different as well. So is there any downside to reaching out to you? Like if somebody has any doubt in their mind, like it doesn't sound like it really costs anything up front, right? I mean, are you able to pretty quickly look at the property and assess whether or not it's worth you even doing the audit? Or it seems like it could be pretty, I guess, costly or inefficient to you if like everybody was calling you wanting this audit. And how does that work?
No, I mean, we're happy to take a look at any property, regardless of the history of flooding and high flood insurance premiums. because there's always a solution, and if there is one, we're going to find it. We have a no risk guarantee, and so we go through the process. We say, here's the solution. If it doesn't work out the way that we have initially proposed, then we don't issue an invoice to the client. So if we were to go to FEMA, for example, and petition a property to be removed from the flood zone and it were to be denied, the client doesn't have any cost from us at the end of the day.
Cool. Well, DJ, that's all the questions I had, but I appreciate you talking to me and giving us some more information. Again, I didn't know this was even a thing you could do. So if anybody out there listening to this, if you ever come across a flood zone issue and you think maybe there's a chance of resolving that or improving it in some way, I'll include his website beneath this video, and who knows, maybe he can help out.
You're free to give my email out there if you would like as well.
Sure. Okay, I'll include that too. Well, thanks again, DJ. Appreciate it, man. And talk to you later.
Yes, sir. Thank you.
You bet.